Welcome back, everyone, from Wall Street Silver. We have our special friend with us again, Robert from Gold Silver Pros. Rob, how are you doing today, sir?
I'm doing fantastic.
Robert, let's review the past few months. Let's talk about what happened with the silver squeeze back in February and our
Mhm.
recent attempt with it. Also tying in our billboard campaign, which is still ongoing as we speak.
Yeah.
What do
Awesome
you think the
campaign, by the way.
results are? What do you
Yeah.
think we can do better next time? Where do you think it's going?
So I love this movement, the guys, what y'all have put together, because you're uniting people from all over the spectrum. We were talking before about it doesn't matter what your political or cultural views are, your age. You guys are kind of one of the uniting forces behind the silver movement, which is awesome to see. I think guys like me and David Morgan and Chris Marcus and people who have been doing this for a very long time have just are so glad that you guys are reaching an audience and really expanding this. So I wanted to thank you for that. Um, so the Silver Squeeze one, we saw late January, early February, over 3 days. We saw people really getting into silver. They went through SLV, which is that ETF fund, which is not the greatest fund to go into, but that's the proxy for silver if you don't want to own physical for a lot of people,
Mm-hmm.
especially generalist investors who are getting in the first time. Bought a bunch of SLV. It nearly bankrupted the LBMA market because the LBMA, the London market, the LBMA came out and said that in a spring report on their website. We've covered this, where over 3 days, 110 million ounces went from that OTC unallocated market in London into the SLV's coffers, then became allocated to SLV. 110 million ounces in 3 days through demand of the SLV. London panicked because they only had 360 million ounces left. And if that had continued for about another 2 weeks, it would have bankrupted the entire London silver market, which would have sent shockwaves through precious metals all over the world. Because we're talking a major hub for some of the major Western hub for some of the precious metals. That came out at the time that was downplayed by a lot of analysts, but the LBMA came out and admitted that in a paper sometime later, which has been all over alternative media. I know people have talked about it on your Reddit channel. And so, that movement exposed the fact that most of what we consider silver or gold for that matter in these markets is nothing but paper. And what's underlying that paper is a very small amount of actual physical. And we were talking about exchange for physical also earlier leading up. So I just want to jump right into that. What had happened with the difference in premium last year when you had the pandemic and you had the difference in premiums between the COMEX, which is in the US, and the London market, exchange for physical went nuts. And the Silver Institute released a paper in October, I believe, where they covered that EFP mechanism, and it went nuts for about 3.5, 4 months. And the rates were different. So people were going along on the COMEX and short what they call loco London in silver. And that actually caused silver to get on planes and fly over to COMEX, therefore putting more pressure on the London market. And they did it in gold, but not for as long.
Mm-hmm.
So London was under incredible pressure last year, and then again this year. First with the EFP mechanism went crazy in 2020, pulling silver out, pulling it west. And then the silver squeeze movement in January, February, the first silver squeeze, pulling it out through SLV. So both times it exposed how weak a position that London had in real physical silver. And since you asked about Silver Squeeze 2.0 leading into May of this year, 2021 was a 10-year anniversary of the May massacre in 2011. That's when the bullion bank smashed down the price of silver from 50 to 34 in early 2000, May of 2011, and then did it again. I think it was August and September, brought it down from like 46, where it had risen to back down into like the low 30, high 20s, I believe. And so this was a 10-year anniversary, May 1st. And so people came out and bought silver, but this time they were smarter. They didn't go into the SLV or some of the other derivatives. They took the physical off the market. Yeah, PSLV going through retail. And for the first time, we were talking to Andy Scheckman and Miles Franklin, and he was saying he was hearing that there was some tightness in the 1,000-ounce bar market. So that heavier industrial market, they started to see some tightness. Now, there's still available silver there, but it's not what it used to be. So, that EFP squeeze, I'll call it EFP squeeze last year, the EFP movement, long COMEX, short London. Then the silver squeeze, January, February, silver squeeze one, and then the May silver squeeze. All three have basically pulled tremendous amounts of silver off the market. What we're seeing right now, it's over 40 million ounces of silver pulled off of COMEX, permanently pulled off of COMEX, out of the depositories since, I want to say, the last third of February. It's 40 something million ounces now. So COMEX is being drained. There was a report on Wall Street Silver. One of your subscribers had done a report, I believe it was yesterday, almost 2 million ounces, somewhere around that, had come off. I think April 16th, John Adams of Adams Economic reported to me that about 1.8 million ounces had come off in one day, April 16th. So we're seeing huge amounts of silver actually being extracted from the exchanges. So there is a run on silver everywhere. And it's just been a string of events dating back about a year ago.
Well, this chart that I've got, I think this is sort of the perfect illustration to explain what you were just talking about. Since the silver squeeze, what has changed? You see, PSLV went into overdrive, taking 1,000-ounce bars off the market from the refineries and smelters before it even gets to COMEX or London. And you just see this decline in the registered inventory on COMEX. At the same time, you see PSLV's inventory skyrocketing to the point where now PSLV has more inventory than COMEX does, which I think is the first time that's ever happened. You know, I see some commentators say that, oh, Silversqueeze failed, Silversqueeze failed. I look at this data, and Mike Maloney actually showed this chart last week on his show. And you look at this data that Ditch the Deep State has been gathering. I don't see how anyone can say Silversqueeze has failed. Silversqueeze is still ongoing, and it's working. And we just have to continue these trends.
People who only look at price, and people who only look at price are typically momentum traders. I don't want to group everybody together and put them in a bucket, but typically people just look at price as the success of an investment or success of a market, or something's happening behind the scenes without understanding what's happening behind the scenes. May say that Silversqueeze 2 has failed. But Silversqueeze 2 was different than Silversqueeze 1 on purpose, because what you had in Silversqueeze 2 is people organizing and saying, how do we actually get physical silver off the market and into people's hands instead of going in those derivative investments? And that actually erodes at the foundation much more quickly than does going through the derivatives. The whole point of the derivatives complex is to be fake supply, right? Fake supply to supply exposure to silver for people who want ETF form or trade hedging, or, you know, whatever trading financial investments like the hedge funds do. But what we're seeing now is a movement into physical. And what's going to happen is that was wave 2. And I said this back in February. I was on Chris Marcus's program. You guys have talked to him over at Arcade Economics. We're doing like this 3-hour marathon live stream. And I said, watch for silver wave 2. People are going to go to physical. And then we're going to have a 3. And I think 3, the next time this occurs, we're going to bankrupt the big exchanges. And I think we're close to bankrupting them. I don't want to talk in detail about this, but I'm going to have a bombshell on my channel next week.
Nice.
Where I talk about the Perth, and we actually, me and a CFA actually go through their financials, and we show how tenuous the position Perth actually now has in their gold.
Wow.
And I think when people see that, they're going to realize how thin the actual physical stocks are in both silver and gold. It goes much deeper than people think. And I think when this wave 3 comes, we're going to start to see undeniable evidence of the effect that the movements had, but also how thin the real inventories are. And I think people are going to start to pull away from those derivatives. Derivatives complex will start to come under a lot of pressure. You're going to see physical and derivative price separate for real and stay that way. And I think that will be more evident to people. But I think round 2 was more about getting to the actual foundational element of the metals, which is getting the physical.
Back in the first silver squeeze in early February, what I found so annoying was how all the media articles were always saying, you can't squeeze SLV, you can't squeeze SLV. And I'm like, we were never talking about SLV. Right. It's like this media, they're such low information type reporters that they just equate SLV with that silver. And it's not. It's just a company that was the first one to grab that symbol ticker and attach it to their ETF. Unfortunately, they got it first.
Right.
And it's just, the media has been trained to think, all right, SLV equals silver. And what we've been doing ever since then on Twitter and on Reddit and on YouTube is we've been trying to make this argument that SLV is suspect. Everything they've been doing with their prospectus, that various, all the different silver news channels, whether it's Chris Marcus has been on top of this, you've been on top of this on your channel, Craig Hemke's been on top of this on his TF Metals report and Sprott Money articles. SLV is very shady in terms of what they've been doing in their prospectus. And and especially everything that just happened with LBMA. Oh, we got to get into that, don't we? It's all the data error reporting that they've been doing. But that's that we could do a whole, episode just on that issue. But I'm going to share another one here where I think this one, and this is a chart from Jim Forsyth. Do you guys see this?
Mm-hmm.
Okay, so this shows, this was the peak of the February move when this red line is what SLV says they did on paper, where they acquired 100, I don't know what it was, 30, 120, 140 million ounces in 3 days. But ever since then, it's been decline. And then they fixed their data error right around here, right? So, but if you look at PSLV, just a total different inventory reaction, the blue line going up.
Yeah.
So SLV is back where they started now in early January. The red lines come all the way back down.
Mm-hmm.
But PSLV's gone from, I don't know, I think it's 90 million is where they started, and they're up to like 140 million now, or something like that, 140 million ounces. And I guess the brown line is the combination of the two.
Mm-hmm.
But it's reaching the point where SLV is not really moving the market anymore, and PSLV is becoming the dominant force in terms of setting price for those marginal 1,000-ounce bars. PSLV is just grabbing them all up right and left. That's what I see different in the market and what I've seen over time the past few months. And I follow these two charts that Jim Forsyth and Ditch the Deep State have been, we're very lucky that we have those two guys who have been tracking this data over time for us.
That's right. An SLV prospectus is sketchy. They don't have audit rights to the depositories, and they basically say if the depositories don't actually have the metal, we have no options, right? We just don't have it. I mean, you read that prospectus and like, why the hell am I investing in this?
Exactly.
The main difference, if people don't understand the difference between PSLV and SLV, PSLV is run by Sprott, and it's more closed-ended fund, so they don't just issue shares at will. Mm-hmm. So they're never going to outrun how much silver they have with their shares. They only issue shares when they have their hands on the silver.
Yeah.
So you basically can't run them in terms of overbuying shares. When you have, I think every share is 0.38 ounce silver or something like that.
Yeah.
If you have about 3 shares, you have about an ounce of silver, no matter what happens, no matter how many shares they sell, and they have stronger relationship with their custodian and audit and stuff. So, I mean, like you said, if you don't want to take physical possession, you want to get into it, have exposure to it through a fund, or you just don't feel comfortable putting precious metals in your home, PSLV is a lot safer in terms of how they structured their fund than SLV. And I agree with you. I mean, that's a perfectly legitimate place to put it.
Mm-hmm.
Can we talk about the price action of silver and how all this kind of ties into it? You had made the point where we had this huge spike up in price over 30. People were throwing money at SLV. My take on that, that to me, that's shadow silver. It's not really there.
Right.
So it's as easy as it goes up, it goes down, because, it's a lot harder to move the price of silver, I think, when it's physical. Would you agree? What are your approaches in terms of investing in silver? Where do you see the silver price going over the next 6 months to a year? And what are your thoughts on the unallocated account and all the news that's come out with that recently, and how that affects the price and price stability?
So I think people are realizing, and this is an important part of the movement that's not going to get headlines. And again, you don't see it in the price. So the momentum traders aren't going to get it. But when you look at the market, people are starting to ditch any form of unallocated. And as John Adams and these other people start exposing these pool accounts or unallocated accounts where you don't physically own that ounce, or you're in a pooled account with somebody else, and so everybody has a claim to the same bar or whatever the case may be. As those people start getting out of those derivatives, they're going to start going for the real stuff. You're going to cause a run on silver. And that's where, I talked earlier in the video, that's wave 3. That's in motion right now. It started with May, but it's really going to go in motion as we go forward. People are going to put their hands on physical, and you're going to see that price diverge. You can see that those premiums on that spot continue to rise. They're not coming down. And then people are going to start to realize, why the hell are we following the COMEX price of silver when it costs me 30, 40% more to get a physical ounce? What's the real price of silver? And when you start to see those premium rise on the 1,000-ounce bars, the industrial parts, which they have, that means everybody, including Tesla, Apple, whoever's buying it for their manufacturing, is also getting higher price. Then you start to look at that derivative price and you're like, you don't reflect reality. And as we continue to take physical off the market, that's what's going to happen. And there's going to come a point at which those derivative markets are nothing but paper. And they're going to have no relevance to people who actually deal in physical, whether it be a producer or merchant, an investor or jewelry maker or whatever the case may be. And that's when you're going to see those derivative prices break, and people are going to start paying attention, and you're going to see it repriced in something that makes more sense. And I don't think we're too far away from that. I think maybe months instead of years.
We just interviewed a fellow named, a CEO named Benoit LaSalle from Aya Gold and Silver. They have a silver mining company in Morocco. And he was telling us that all the traders, all the smelters, all the refineries, the ones who come to him every day, every week, trying to get silver from him. And they're a smaller company. They're doing 1.5 million ounces a year, and they're growing towards 4 million. But he's telling me they're already offering him to buy his silver concentrate at above spot. I mean, he's a mining producer, and he's getting more than spot price for his product right now.
Yes.
Just because the different traders are out there, the guys who acquire it from the miners, they're offering premiums. And he said it used to be right at spot what he would sell it at. Now he's getting like $1.50 higher than spot, because people are trying to get in front of each other, get in line, and talk him into breaking supplier relationships with his existing customers of where he sends his concentrate.
The COMEX has made it harder to source physical silver that way. So if you want it in any size, it makes sense that they're going after miners or whoever has it. And that's why the premium has been rising on 1,000-ounce bars. And then it doesn't surprise me that a manufacturer, before they even get it poured into a 1,000-ounce bar, they're moving farther down the supply chain to where they pull it out of the ground, and they're probably buying the doré bar, which is a doré bar is like a mix of silver, lead, gold, in which it needs further refinement. You can get it a little bit cheaper, but they're probably going to get that stuff, because if they can't get the refined 99% pure bar, they're going to go after the next best thing that comes right out of the mine, and they pour it into a bar, and you take it. I'll get the silver out of it. That doesn't surprise me at all, and I think that's going to continue. The two main drivers for silver outside of investment demand are the space race and also technology, basically, and how we use it in industry. So if you're the green movement, so if you're into solar panels, if you're buying electric vehicles, ton of silver there. The second one is the space race. Nokia on their website has an article where they got contracted by certain countries to build a 5G network on the moon. Wow. And this is public on their website. So people are pushing out into space. You've got the space race, the Space Force, India's launching satellites, all of that technology out in space needs silver. You can't survive without it. Wow. So as we continue down that pathway towards more technology and the demand for lower carbon emissions and green tech, that's driving tremendous industrial demand in silver, where I would not be surprised if mining companies are selling directly to companies like Tesla, Apple, Nokia, Samsung, all those companies that are producing these products.
Rob, what do you see like going on in the crypto world right now? In the past 2-3 days, you're seeing like a huge, downtrend on crypto.
Oh gosh, I could do 10 hours on this. So my background's technology. So I had 25 years in tech, 3 degrees in this space, have an IT degree. I actually created my own IT degree at the associate level because I wanted to go into technology and they didn't have the degree I wanted. So I went to the dean of the department and said, can I create my own degree? She said, sure. So I took Unix administration and Cisco networking. So I was in IT for a long time doing server administration and networking. Then I moved into business and technology, and then I did a master's in cyber.
Nice.
So 3 degrees in the space, 25 years experience, worked for big companies, Big Four as a consultant and all that stuff. So I understand crypto probably a level a lot of people don't, because when I read the white paper, I can actually, okay, I understand this at the technology level.
Nice.
So crypto to me, by in and of itself has no utility. The blockchain that it rides on can have utility. That's the ledger. That's how they keep track of the transactions. All these coins they put on top are nothing but fiat currency, because first of all, if you turn off power, they have zero value. But second of all, people say, well, there's only 21 or 27 million Bitcoin, whatever it is. Yeah, fine. But there's now almost 10,000 cryptocurrencies based upon the same thing Bitcoin is. To me, that's like fiat paper money. It's worse because you have 120 fiat paper currencies and now you have 10,000 crypto coins.
Yeah.
Tell me how the crypto coin's any better than a fiat currency. The utility's in the blockchain. It's not in the crypto itself. And so when you see, when you saw the pandemic hit the US last year, you saw Bitcoin lose 80% in a single day. The guy that follows this best, I think, is Kieran Von Hest. He goes by Dezo Games on Twitter.
Yeah.
He is the guru. He's just written 3 books. I'm reading through his books now before he publishes them on the cryptos. Brilliant guy. And I think he has it right in that the crypto model itself has no value. It's the blockchain. And the blockchain only where you can use it to support something else of value. So it has to be rooted in something else. And when all of the dollar systems and collapse and the pound collapses, if you're sitting there with Bitcoin, could it have some value short term? Sure. But when it comes down to people needing food, and you're going to barter, your piece of paper where you have your QR code or your crypto is not going to do you a damn bit of good.
Yeah.
And the reason I know this is because I've interviewed a couple of people who went through hyperinflations. I interviewed Fernando Aguirre, who went through it in Argentina in 2000. And I asked him about crypto. This is 2 years ago. I interviewed him. I asked him about crypto and he laughed. He's like, no, we're bartering chickens and goats. And if you have gold and silver, you've got some value. But if it ain't physical, it ain't worth nothing. So when you get into financial situations where you have financial trouble, the old pre-1965 silver coins that have 90% silver, and anything that you have that has real value, people are going to value that. They're not going to value your crypto. Yeah. And the only cryptos I would put any faith in are cryptos that are based on gold and silver. You've got Kinesis, you've got Lodecoin, where you've got that connection between that crypto, which is just facilitating value exchange, but it's tied to that precious metal.
We should be very careful when we describe those things, such as Lode or Kinesis. Those are not cryptos. And
True.
I've made the same mistake. Those are digital tokens because they are not decentralized. Those are centralized based on a specific company managing the vaults with the gold and silver linked to that digital token, correct? At least that's my understanding.
That's a good distinction. So it's not your average Ethereum, Bitcoin Cash, Dogecoin, whatever all these goofy coins are. It's basically, it is a unit of value based upon the metal that they have, which is fully audited, insured, all that kind of stuff. And it, like you said, it's a token of exchange. So in other words, it's like when you have the dollar based on the gold standard, essentially. And you could actually redeem a dollar for gold at the bank.
Yeah.
And something like that can't be decentralized. Otherwise, it would lose its connection to the silver and gold, right? It has to be centralized with a company that's actually holding the gold and silver for the digital token.
Yeah, there has to be somebody that ties that value to that token. So that's a good distinction. The analog to that, and I think a good point that you made here, are stable coins like Tether, which are nothing but pure Ponzi schemes. And we had a video with Dezo about a month ago, and he just ripped apart Tether and some of these other stable coins. Essentially, what has led to in Bitcoin is Tether. And basically all it is a Ponzi back between the two of them. And a lot of the rise in the crypto space is not retail demand. It's not you and me. It's the creation of these stable coins, which are bidding up, Bitcoin and Ethereum and all these others. And then by big players. And if you look at the maps of who's selling them, what happens is the big players bid up these Bitcoin and then they sell them to the suckers in the market. And then you have the big crash. And this has just been going on over and over and over again.
Yeah.
And it's going to continue to go on over and over again as long as people are, out there buying that stuff.
Well, this is the Bitcoin chart right here, and you can see, I just saw the financial report that 49% of Tether's supposed assets is in a category called commercial paper other. And it's supposed to be backed by money that's fully in some, I forget whether it's the Bahamas or something like that.
It's supposed to be 1-for-1 with dollars. They had an audit report, which wasn't done by an auditing company, that said that it admitted they didn't have dollars to support the Tether, and it was in other accounts receivables. And then it came out that it was in other papers. So in other words, Tether is based upon other paper derivatives.
Yeah.
It's kind of like mortgage-backed securities or something.
Yeah.
I know most of your audience already knows this, but you have a background in auditing, correct?
Yes, I was an auditor for 12 years.
Yeah. So the Bernie Madoff scam, it happened back during the 2008-2009 timeframe. And when the easy money stops is when these scams come to light. They can no longer be hidden because they always rely upon more money coming in constantly to keep everything funded, keep everything liquid. And I think these things can always go on for far longer than we think is possible. Mm-hmm. But at some point in the process, the money dries up.
Yes.
And that's when something blows up. And I'm waiting for Bernie Madoff was the poster child last time. Lehman Brothers, Bear Stearns, those were the poster children of the last great financial crisis. And I'm just wondering, what's it going to be this time? What's the scam that's going to blow up that is our signature for this crisis? And I'm thinking, everyone knows Dogecoin was fake. It was a joke to begin with. Yes. So I don't think it's going to be Dogecoin, because when Dogecoin blows up, everyone's going to just say, of course Dogecoin blew up. We all knew Dogecoin was going to blow up. But
Tim, you say that, but I've had several people in my Facebook feed ask over the last week or so, does anyone know anything about Dogecoin? Because it's just been in the news media and people just change. It's that herd behavior. And I think we're starting to witness kind of the herd move away from crypto a little bit. I mean, Bitcoin reached its peak on April 14th. It's nowhere near. The market just rallied today and yesterday. You would have expected Bitcoin to rally a little bit, and it's just dead flat. I really think that the tables are turning on crypto.
Agree.
Well, hold on. So here's the Dogecoin chart. Notice I actually have these all in my watch list, just so I don't actually buy them, but I watch them.
That's funny.
And this is purely, I think this is purely an Elon Musk phenomenon, just because he's made such a joke out of it, talking about it, that now unfortunately people take him seriously, and they don't realize he's joking. But he's given this thing such a life of its own that, I mean, this thing went from fractions of a penny up to, it's now trading at 55 cents per Dogecoin. I mean, that's ridiculous. This is Chuck E. Cheese money. This is literally monopoly money.
And the founder said it was started as a joke. It was really
the founder.
It was just to have fun.
Curious, have you actually ever invested in any crypto?
No, I was skeptical up front with them, I guess because of my tech background. And when I started, back in 2011, 2012, when they started really being talked about, I looked at them and I'm like, I don't get it.
Are you invested in things like Kinesis or any of those other kind of?
I immediately looked at Bitcoin type crypto as fiat money.
Okay.
To me, it was just another form of fiat. Sure, if I had a friend who would send money back to his parents, they lived in another country, and he could do it at low transaction fees, back when you could actually do that. And I was like, okay, it's a vehicle to transfer money, but it's just like a wire. It's just a little bit cheaper. But the problem, you can't scale that on the Bitcoin version of blockchain and all the other ones that are based upon that blockchain, what I call blockchain 1.0. Blockchain 1.0, you can't scale a lot of transactions. Bitcoin can only handle 7 to 8 confirmed transactions a second. I mean, come on, we have 7 billion people in the world. You're telling me that you can only do, it's going to take a billion seconds for each person to transact one time.
Agreed.
I mean, come on. It doesn't scale.
Mhm.
So I looked at it and I saw all the problems with it. I was like, better versions, Hashgraph, for example, a lot faster, but still, what's it backed by? Hashgraph scares me more, and I'll tell you why. Hashgraph has a lot of better things in Bitcoin in terms of better transaction validation, but it's the council that runs it is a bunch of corporates. And to me, it's corporate money. And I think if anything could undermine national sovereignty, nothing could undermine national sovereignty faster than international corporate money. So I was a fan of Hashgraph until they started their council of corporates, and I said, I'm out. Don't want corporate money. I would rather have local minted coins than I would international global, super currency.
So how are you investing your money?
So I'm gold, silver, and farmland guy.
Yeah.
I'm talking to Kinesis right now about getting involved and maybe investing in them. The reason I like Kinesis is because, like you said, I'm a former auditor. So I've sat down with a lot of the people there, a lot of their management there, and I basically audited them and said, show me everything. And I had to sign an NDA, and I actually went through a lot of stuff. And I came out of that saying, okay, I think I'm a believer in Kinesis. Kinesis is, like you said, it's not a crypto, it's a token. That token's backed 100% by the metal. They're audited. You can see it in real time. Everything there looks legitimate to me. So I would, if I was going to go into some sort of online token / currency, it would be something like that. I would never touch the ones that don't have an anchor to something real. I would never touch them. I mean, logistically they have issues, but I think they're just pure fiat money, to be honest.
I agree.
Well, my problem with it, I think you already touched on this, is the big argument for Bitcoin is, there's only going to be 21 million Bitcoins and that's it, then it's done. The problem is there's an unlimited number of cryptocurrencies out there. Mm-hmm. And there's going to be the same, what you just said, the crypto miner network for Bitcoin is limited to 7 or 8 transactions per second, whereas Visa and MasterCard handle millions of transactions per second.
Right.
So Bitcoin's just never going to be competitive with the current Visa MasterCard system that already exists to process transactions.
Right.
So if we already know that from a technology basis, Bitcoin is not competitive, that means Bitcoin's not going to be the dominant cryptocurrency in the future. It just doesn't, like you said, it doesn't scale.
Yeah.
Well, if it's not going to be the dominant one and another one is going to be, then how do any of them have value? Because Bitcoin's the only one that has the network advantage, the first mover advantage. Everyone else doesn't have that advantage. So there's an unlimited number of, if there's an unlimited number of cryptocurrencies that can each keep improving upon each other, then they're no different than the dollar. Because the problem we have with fiat currencies and the euro, the dollar, every currency is the central banks just keep printing more and more and more of it. And well, it seems like individuals can just, on a whim, create a new cryptocurrency. Yep. Oh, well, I don't like Ethereum anymore. Well, we're going to start Ivan bucks now. And that's, I mean, seriously, it's that stupid. Gold, silver, pro bucks now. Robium is the next one, right? For I don't know where it ends. Everyone, Elon's going to have his own private one, and just because he has 50 million followers on Twitter, a lot of people would probably buy it. I mean, it's really that ridiculous with cryptocurrencies these days, and I can't pick a winner. There's too many of them.
Hey Robert, I have a guest suggestion for you. Why don't you invite Michael Saylor on your show to talk about Bitcoin?
So I've challenged people to debate me on crypto, and everybody I've challenged is back down. And I'm talking people that are big proponents, big influencers. They won't come on the show because I tell them, I said, I'm going to warn you. I can read the white paper and understand it, and I know you don't. And
like the tech background.
Yeah, I've got the tech background, and I said I'm gonna hammer you on that stuff, and you're not gonna be able to answer questions. I'm just warning you ahead of time. I don't want it to be, I don't want you to get on there and start preaching your crypto religion, and Bitcoin this and Bitcoin that, and then I point out that the laws of physics will prevent Bitcoin from ever becoming any sort of currency. Bitcoin couldn't be a currency for the Dallas area where I live. There's too many residents, much less the world. It doesn't scale. However, blockchain has immense uses for a lot of things, and blockchain itself is a wonderful creation, and that's where all the utility lies. And you can do a lot of things with blockchain. I would invest in a blockchain company. I wouldn't invest in one of these currencies.
Now, with your tech background, Rob, now do you see like Bitcoin coming to a complete collapse, or like people stop using in the future, or no, or will it never collapse?
I think the novelty of Bitcoin will keep it around in some shape or format. One additional warning I'll give to people for Bitcoin is the Lightning Network was supposed to be, that they developed a few years ago, is supposed to be the answer. And when I sat and looked at the Lightning Network, what I saw was central banking, because in the Lightning Network, you have to have liquidity pools to facilitate movement across that network. And this is in the Lightning papers. So the Lightning model is a central banking model. So if you want a digital central bank, Bitcoin's your answer. And that's why a lot of the CDBCs, the central bank digital currency, CBDCs, like FedCoin and the digital yuan and the digital euro are using the Bitcoin model, essentially the Bitcoin model for the most part, is because it's conducive to central banking, because you have to have pools of money, and it allows a very few people to control that money in that system. And the Lightning Network is probably the absolute, I think the Bitcoin creators would like to go back and get rid of the Lightning Network, because it's probably the worst thing that ever happened to Bitcoin. It was supposed to be the savior, and it turned out to probably be, the final nail in the coffin. And flat out, it doesn't work, and it destroys everything that was potentially good about Bitcoin in terms of decentralization, depooling money, allowing true, freedom of transactions. And so Bitcoin will go down, like in the Smithsonian Institute, as the first cryptocurrency that let everything off. It'll have its place in history, but it's a speculation right now. It's a novelty, and it won't take too long. I mean, it'll probably be a few years just to be around, but in the annals of history, it'll be one of the shortest lived currencies in the history of the world.
But where do you see this, speaking of central bank currencies, how do you see that rolling out? The Great Reset, the digital dollar, obviously the digital ones are already live and active. What do you see rolling out over the next year or two?
So in China, the state has hinted that they may force people to use a digital yuan. It's been a flop right now. The Chinese press and the American press are reporting that people are rejecting the digital yuan in droves because they use WePay and Alipay, and it allows some anonymity. People are aware that the digital yuan is basically would allow the state to basically confiscate people's savings, have complete record of every transaction they make. The Chinese people are not stupid, and they're in droves rejecting the Chinese yuan. That is the biggest positive sign in the fight against central bank digital currencies we could ever have, is that the first one comes out, and the people that are probably propagandized the most by their state are still like, no, this is complete shit, and we still don't want it. And so I think that doesn't bode well for the digital euro, the digital dollar. It doesn't bode well for that scheme. And so I think it's going to be rejected. And I don't know what the catalyst is going to be. If they want to try to force those central bank digital currencies, they're going to have to do something like take us to war and force us, because the free people of the world are not going to accept it.
That makes sense.
Yeah, I totally agree.
It's been a great discussion.
Yeah, thank you so much, Rob, for joining us. We appreciate you a lot.
Yeah, we appreciate you guys too. On my Sunday live stream, I'm going to do something from Reddit, and
nice.
I'll send you guys that link.
Yes,
I'll pick some really juicy content from there, and I'll talk about it.
Cool, man.